Hello, welcome to our Monday Business News Report. It's now time to bring you a feature on the show today as we focus on the highlight of the week that was the Monetary Policy Committee of the Central Bank of Nigeria left key lending rates and other parameters steady. Now, the committee attributes reasons for maintaining this stance to allowing the bank current policy measures to further permeate the economy. Naira Project reports.
The monetary policy rate, cash reserve requirement and liquidity ratio have just been retained by the Monetary Policy Committee. This is based on reasons that tightening could contract liquidity and put pressure on the market. Loosening, on the other hand, could compromise the downward inflationary trend. Maintaining the current monetary policy stance was therefore the most appropriate option considering prevailing circumstances.
Retain NPR at 11.5%. 2. Retain asymmetric corridor at plus 100 and minus 700 basis points around the corridor, and retain the CRR at 27.5%. 4. Retain liquidity ratio at 30%.
The Apex Bank also says owner of online forex platform abokifx.com, who is being investigated for illegal forex transactions, will be made to face the full wrath of the law.
Between February 2020 and May 2021, he had inflowed and sold tens of millions of naira in FX to several Nigerian companies, and we'll find those companies as well. We are finalizing our investigation and must warn these companies that patronize him that they are also going to face our wrath.
The dollar has seen a rise in the parallel market since the Apex Bank stopped sale of forex to bureau exchange operators. The CBN maintains that commercial banks remain the only legal platform for forex sales. It tells those with genuine need for forex who have been denied access by the banks to report such incidences to it. The bank, however, says those who purchase forex with illegal travel documents will be caught and made to return the currencies.
After 2 weeks, they check and find that you cancelled your ticket or your visa is fake. They will call you because you are their customer. They have your BVN, they have your number. They will call you to return the dollar. If you do not return it, they will place your name on their website, your BVN on their website. We will pick those details. We will send them to EFCCs and other crime agencies. They will pursue you. You must return the dollar.
The bank gives an insight into how the soon-to-be-launched E-Naira initiative will work, adding that the selection of the foreign technical partner to manage the project followed due process.
We chose that they will establish their company in Nigeria. The Central Bank of Nigeria will own majority stake, substantially majority stake in that company. So it is not my company, as people have said, that I went to the Caribbean to set up a company for one small unknown company. It's a company that will be established in Nigeria. You will see it on CAC, and it will be majority holdings will be the Central Bank of Nigeria.
The Apex Bank hopes to pursue its interventions even more aggressively to boost the recently recorded 5.01% growth in GDP and drop in inflation. Naira Project, TVC News, Abuja.
And now back in Lagos to discuss the highlight of the Monetary Policy Committee meeting of the Central Bank of Nigeria this month. I have joining me virtually the Chief Executive Officer of Cowrie Asset Management Limited, Johnson Chukwu. Good to have you on the breakfast show this morning.
Thank you. Good morning, and thank you for having me.
Now, the retention of the monetary policy rate at 11.5% and other key parameters retained did not come to so many as a surprise, looking at the state of the economy and the instances the central bank governor has also raised. Either tightening or loosening isn't a better approach. What's your thought on the retention so far?
Yes, David, like you said, it didn't come as a surprise to most analysts. The simple reason inside is we are dealing with a situation where the economy, though grew at 5.01%, that growth was still considered as largely influenced by the base effect. So we still consider the economic situation as very fragile. And therefore, the Monetary Policy Committee was not expected to take any measure that will constrict or contract the credit flow into the economy and then further slow down the economic growth or possibly tip it back into negative. Similarly, we have an inflation rate of about 17% in August. And that also implies that a 17% inflation rate is far above the CBN target of about 9%. And we all have been complaining about the inflation rate. So nobody expected the Monetary Policy Committee to take measures that will further exacerbate the inflationary pressure or reverse the declining trend we witnessed in inflationary growth rate in the past couple of months. So the CBN is still dealing with what the CBN governor called the policy dilemma, where you cannot afford to tighten because tightening will lead to slow down in economic growth rate and possibly a reversal into a recession. And you can't afford to expand because expansion will put more pressure on exchange rate, more pressure on inflation rate, and these factors are already at the high end of the threshold. So it was expected that the most appropriate thing to do was keep the rates at the current level and watch the economy and hope that economic expansion will continue while the moderation in the inflationary rate will also continue.
And then also dealing with the headwinds and tailwinds we have at this point in time, we also have to be quite intentional about the initiatives and then how we manage all of this. But now let's also look at one of the highlights of the meeting, which was the foreign exchange policy of the Central Bank of Nigeria. Now it's coming harsh, it's talking tough, especially looking at the fact that there are still some sharp practices with the mention of Aboki, FX and other entities. Now, do you think it's enough to talk tough, especially with regards to the policies to checkmate any sort of illegal acquisition of Forex at this point in time?
Well, what I would say is that the CBN governor is dealing with a very difficult situation. Some of those factors are beyond his control, one of which is the flow of capital or flow of funds, Forex, into the economy. We've seen a drastic reduction in the flow of foreign exchange into the economy. I mean, from what we call operational flow. That is coming from our sales of crude oil, coming from diaspora remittances, and coming from capital importation through foreign portfolio investment and foreign direct investment. We've seen a slowdown in all those major sources of inflow of Forex. Whereas, on the other hand, we also see an increase in the demand for foreign exchange, either from remittances of dividends and other capital earnings, or from importation of goods and services into the economy. So the central bank is dealing with a huge demand-supply gap, where demand far outstrips supply. So anything, any other factor that worsen that will actually add some pressure to that existing pressure, that pressure coming from the demand-supply gap will certainly rub up negatively on the CBN governor, and which is why he's sounding tough. But if you deal with a situation where your own earnings cannot meet your demands or your payments, and then you have to keep drawing on your reserve, and that's putting a lot of pressure on the foreign exchange rate, and then you also suspect that there are also other factors that are worsening that beyond the natural gap, then you certainly will be agitated, and I think that's what is happening. But like I said, it's a tough battle the central bank governor is dealing with, because he cannot influence the balance of trade, because the balance of trade is coming from what is the value of our total export against the value of our total import. That has turned negative for quite some time, though we saw a narrowing in the second quarter, but we're still a negative balance of trade. He cannot influence diaspora remittances. He has tried to incentivize diaspora remittances through what he called Naira for dollar, but we have not seen an increase in diaspora remittances. As it stands today, given a precarious economic condition, he may not necessarily be able to influence capital importation through portfolio investment until we're able to meet the demands of those who want to remit their money out of the country. So these factors are constraining or limiting factors he's dealing with. And then if anybody comes to him and says, we also see some untoward behavior, you can understand why he had to respond with some threats.
And now, do you see any chance of the Central Bank of Nigeria also increasing the allocation to banks? Because like you highlighted, there's the issue of that demand and supply deficit at this point in time. So it's quite difficult to have transactions come with ease.
Well, it is possible, but whether that is sustainable is a different thing. If we are dealing with a short-term gap, it's easier to say, okay, let's be abrasive, let's use a big bag approach. meet those demands once and clear them. But we're dealing with a systemic negative outflow. And which is why I said, look, your balance of trade, which is the core of your payment source, is negative. If your balance of payment is negative, balance of trade is negative, and the overall balance of payment is also likely going to be negative. So you are dealing with a consistent negative outflow. And if the central bank says, okay, let's be bold and then increase the supply to the banks, what it will end up doing is depleting the reserve. That approach would have been most appropriate if you are saying that we are dealing with a short-term shock, and then the next month we're going to have a positive balance of trade position, and then from that proceed we can cover up whatever we have drawn from our reserve. The other source of reserve that we're building is coming from borrowing. Borrowings are not flow. Those are one-off capital injections, which if you use them to defend the naira, at the end of the day, you're going to exhaust them and you're not going to go back and borrow again. So it's a difficult and tough job that the central bank is doing, managing the foreign exchange, given the current fiscal condition of the country.
And wrapping up our conversation now, what do you think is the future of the broad exchange segment of the market as well? It's quite difficult for them to also stay afloat, especially looking at the fact that we are no longer seeing any new issuances, and then the fact that we also have a suspension of forex to the broad exchange operators. What do you think is the future of that segment of the market?
My take is that in the medium to long term, the central bank will allow them to operate. They are licensed by the central bank, but beyond being licensed by the central bank, what the central bank needs to do is to reform that segment of the other bank financial institutions, because they are part of the other bank financial institutions. The central bank needs to reform them and ensure that only those with appropriate structures and ethical standards operate in that segment of the business. The reality is that they also provide a need, which is one of the reasons why you are seeing the kind of spike in exchange rate, because they are able to meet the informal demands of those who need small-time funds that do not have the time to go to the bank, or the banking system, the current structure in the banks cannot accommodate their need within the time frame they need those funds. So the BDCs have a value in any economy. They are there everywhere in the world. It's just for the central bank to reform them and ensure that only those with appropriate structures and ethical standards operate in that space. So I think they will eventually come back to business.
And in the next 10 to 11 days now, we're also expecting the pilot scheme of the E-Naira. What do you think are the biggest prospects and also the blind spots we are not necessarily looking at within the cryptocurrency space?
Well, the biggest prospect is that we're already dealing with a situation where a lot of young people in Nigeria have embraced digital currencies. And like I told some group of young people yesterday, we may end up in a world economy where digital currencies are the primary medium of exchange, and legal tenders are basically. And then for that to happen, the central bank that are progressive, that are forward-looking, will have to incorporate them as part of the legal tender, which is what the central bank of Nigeria is doing, to also issue digital currencies. The blind spot would be that previously, or as it stands today, digital currencies, cryptocurrencies have been used to finance illegal transactions without trace. But the fact that central banks are now incorporating as part of legal tender will also try to eliminate that blind spot where currencies that cannot be tracked and traced have been used to finance illegal transactions.
And looking at the reception as well, what sort of reception do you think Nigerians would also use to embrace the E-Naira? We've already, their sentiments built already just because of the policy measures that we've also seen in terms of cryptocurrency, especially with Bitcoin trading at much more. Do you think we have a friendly environment that would welcome this E-Naira initiative despite the noise in the background?
Well, what I say is that I think the young people will first be on the sidelines to watch how the Nigeria E-Naira performs, and then they will try to benchmark them with other currencies that they have been trading with. And if the E-Naira meets some of those attributes of those currencies and actually come up with stronger safety or security measures, then investors will embrace them, not just Nigerians, possibly investors from even outside the country.
But isn't it enough just to mimic other central banks as well, having such cryptocurrencies as well? What sort of working model do you see as replicating, or to what extent do you see as to what range do you see us tilting?
Well, in the first place, like I said, the world is moving towards digital currencies, and we're already digitizing virtually everything. So it's not just a case of copying what other central banks are doing. It's realizing that this is the direction of the global currency, and staying out of it will simply mean you are not going to be playing the global economic space. So that's one factor. But as per the second aspect of your question, what I think the central bank has done is to ensure parity, purchasing power parity between currencies issued by the central bank and the E-Naira that will also be issued by the central bank, which means using the E-Naira will mean that you are not likely going to lose any value. The central bank has also specified limits to transactions that will be stored digitally by each category of banking customers. So that will also ensure that we have some level of control. And then what the central bank will monitor and observe as well as learn from the implementation of the E-Naira, such that if we do not have a situation that would disrupt our financial ecosystem.
And I would just like to put you in a fit at this point in time, a yes or no answer. Do you see the same thing replicating as we've had in El Salvador?
No, I don't think so. El Salvador is a very different situation. The economy of that country has been in a difficult situation, and you remember that their own currency is already tied to the dollar. What they use is largely dollar. Their economy has been dollarized, and I don't see Nigeria trying to go in the direction of dollarizing the currency.
Thank you very much for your time on the Breakfast Show this morning, Johnson Chukwu. It's been a pleasure speaking with you.
My pleasure.